Understanding lease options, a comprehensive guide. A lease option, often referred to as a lease-to-own agreement, serves as a bridge between renting and buying property. This legally binding agreement grants tenants the right, but not the obligation, to purchase a property during or at the end of a defined rental period. In contrast to standard leases, lease options offer unique financial and strategic advantages to both tenants and landlords. This article delves into the mechanics of lease options, their characteristics, and the various contexts in which they can be employed. Key features of a lease option. 1. Choice to purchase. At its core, a lease option provides tenants with the choice to buy the property at a pre-agreed price. This right can be exercised during the lease period or at its conclusion. 2. Exclusive offer. While the lease option is active, the property owner cannot sell the property to another potential buyer, safeguarding the tenant's opportunity. 3. Rent premium. Tenants usually pay a monthly rent that includes an additional fee, which contributes toward a future down payment if they decide to purchase the property. 4. Duration. Lease options can vary in length, though they typically last between 2 to 3 years. 5. Maintenance responsibilities. Depending on the agreement, tenants may be responsible for certain property maintenance, which typically falls to the landlord in standard leases. The mechanics of a lease option. A lease option operates in a unique manner compared to traditional lease agreements. Here's how it generally works. 1. Price agreement. The purchase price for the property is determined at the start of the lease, allowing the tenant to potentially buy the property at its current market value in the future. 2. Upfront option fee. Tenants often pay an upfront option fee, usually around 1% of the property's price, granting them the right to buy. If they choose to exercise the option, this fee can go towards the down payment. 3. Rent credits. The premium paid beyond standard rent can serve as credit for the property's down payment. If the tenant opts not to purchase, they forfeit this extra amount. 4. Financing. Most banks allow such credits to be applied toward a mortgage down payment, but it's wise for tenants to shop around to understand individual bank policies. Lease option terms explained. Understanding the terms involved in a lease option can clarify the rights and obligations of both parties. Lease term defines how long the tenant occupies the property. Purchase price outlines either a fixed price or a method for calculating the final sale price. Option fee, a non-refundable sum paid upfront to secure the purchase option. Exercise period, specifies the timeframe within which the tenant must decide to exercise the option. Default provisions, clarifies the actions to take if either party violates the agreement. Appraisal and inspection, ensures that the property's value and condition are verified before any sale takes place. Industries that utilize lease options. While lease options are predominantly recognized in real estate, various sectors incorporate similar agreements. 1. Automobile industry. Car leases often provide the option to purchase the vehicle at the end of the lease period. 2. Equipment leasing. Industries such as construction or healthcare may lease equipment, taking the option to purchase for evaluating performance and value. 3. Technology sector. Software and hardware can be leased with the option to own, allowing companies to stay current with advances. 4. Agriculture. Farmers may lease land with an option to purchase based on future crop profits. 5. Aviation. Airlines can lease aircraft with purchase options for financial flexibility. Reasons for entering a lease option. Both renters and owners have compelling reasons to enter into lease options. Benefits for tenants. Path to ownership. Tenants looking to own a property may lack the full down payment or favorable credit scores to qualify for conventional mortgages. Price fixation. Locking in a purchase price can lead to savings if property values increase. Trial period. Renters can evaluate the property, neighborhood, and schools before committing to a purchase. Advantages for property owners. Attracting buyers. Lease options can widen the pool of potential buyers and provide a steady rental income stream. Delayed sale. Owners can delay a sale while maintaining property revenue, often at a premium. Tax considerations. Some owners may face tax implications favoring delayed sales, making lease options attractive. Lease option versus other agreements. Lease option versus right of first offer, ROFO. ROFO grants a tenant the initial opportunity to purchase before the property is offered to other buyers, but it doesn't imply a binding agreement like a lease option does. Lease option versus right of first refusal, ROFR. In contrast to lease options, a ROFR gives tenants the chance to match an offer from another buyer once the property owner decides to sell. Important considerations for lease options. When considering a lease option, ensure to obtain renter's insurance for protection against personal property loss. Include appraisal contingencies to assess the home's value prior to purchase. Have a legal professional review the agreement to prevent misunderstandings and disputes. Real-life example of a lease option. Imagine a landlord who wishes to sell a $500,000 property, but their tenant is interested in purchase but is not yet ready financially. They agree to a lease option, where the tenant pays an option fee of $20,000 along with a monthly rent premium. If the tenant successfully secures financing and decides to buy after 2 years, the total amount paid in option fees and rent credits is applied to the purchase. If the tenant doesn't buy, they lose the additional fees but can still complete their lease. Conclusion: the strategic move of lease options. Lease options present a practical route to homeownership for many renters while providing landlords with alternative selling strategies. Both parties can benefit from the unique features of these agreements, fostering a cooperative environment for future transactions. As with any financial decision, thorough examination and legal counsel are essential to navigating lease options successfully.